morning, everybody. It's Chris from Serene Education with the 4 majors news update for the 4th of July 2013. To all you Americans out there who listen to this or watch my videos, have a fantastic 4th of July. Keep safe. Other than that, let's crack on. Euro against US dollar, starting with looking at it with our FX8 Ultimate template. Bottom right hand corner. And what do we have? What happened yesterday that really shook the world? Well, yesterday we had news. We heard that the military in Egypt had overthrown the government. So that's going to be a sense of achievement. And we saw oil really pushing on these past couple of days in the wake of all the unrest we saw in Egypt. So that'll be a bit of peace of mind. The overthrow, now we've got to see if they can actually re-elect somebody who's going to be the best odds for their country. Other than that, Portugal, word out that there's some issues out there with issues in Italy apparently. So there's a lot of uncertainty still out there, guys. And so we're going into non-farm payroll. Today we have, as we said, as I mentioned, we have the 4th of July bank holiday for the US market. So not a lot of volume on the market this afternoon. However, we have interest rates announcements for Euro and Sterling this afternoon, just after 12. And which leads into tomorrow, which is our all-important non-farm payroll. So a lot of news coming out today as well as tomorrow. So if you are trading, please trade very, very attentively. As it stands, let's have a look at the euro. So we saw yesterday starting with a lot of negativity in the market. However, the close of play actually finding support on the daily fib retracement here, the 23.6. Still, however, trading below that monthly fib here in the shape of the 38.2. And as long as she maintains to do so, ideally she still looks negative. We are seeing consolidative, however, at the underside of it, and as long as this 38.2 remains in place, we should still look for that downside. Spring lows, the candlesticks are red, so we have the red arrow on our daily. The candlesticks on play now in red. RMO is just below the zero line. MACD has been below the zero since the fall of euro against US dollar recently, but we are consolidative. As you can see, she's red. So ideally, if you're going to see any further negativity for this particular pair, then we do need to see the 23.6 here, our daily 23.6 actually being breached. You can see there's some negativity on our day for our hourly, and we have the R squared complementing that. So there is intraday shorting opportunities. However, there's a bit of buying on our smaller time frames, not with a lot of true sentiment. So if we go to our 4-hour chart, you can see price is still making swing lows, very tentatively moving lower. You can see through here, swing low, swing low, swing low. And you can see yesterday's movement moving higher and above the 23.6, but still being capped by that all-important monthly fib, which is at the 38.2 here, just above the 1300 mark. So in fact, it's sitting at 130363. So, but anything above 1300, look as that is a major. So you can see that the institution moving average above price. All the moving averages on our 4-hour are particularly above price. RMO has been below the zero line on our 4-hour since we saw this major break to the downside. So as long as she maintains below 38.2, the sentiment is still going to be looking negative. But ideally, if you want to be looking for opportunities downside, rather see price trading below the 22.6 in particular. So on the 1-hour chart, you want to see price heading below this 12.9720 mark for shorting opportunities. But as I mentioned to you, she's bounced up for a reason. So as long as she stays above 22.6, then look for consolidation to still occur with an attempt to the high. If she gets below 23.6, then look to the downside in the direction of the overall major trend for this particular pair. Sterling, here again, a lot of negativity recently, but yesterday, bullish engulfing candle. You'll notice that this chart over here, particularly looking far more negative than euro. The euro is looking a bit indecisive, but you can see that in the candlesticks. Here, sterling is very decisive, breaking lower and trading below our all-important 23.6, which is our monthly fib, as well as our weekly fib here at the 50%. So there's a lot of resistance where price is trading right now, and that constitutes to that 15,300 mark, a very strong major support and resistance level going back to the 2010. So as long as it maintains below that, even though we had this bullish engulfing candle, she still came unstuck underneath this. As long as she maintains below the 23.6 here, this area, she's still looking negative. Red arrow, red candles, all the moving averages above price. And you can see that we have the R squared complementing that negativity that we're seeing intraday. So RMO below, MACD below, but consolidated because of the pullback. She is, if you look at it, that bullish engulfing candle took us above the 23.6. We saw a break lower on the euro. However, on the sterling. But you can see that the highs, okay, this current high over here, not too far off from where that happened. So that we would ideally like to see this trend line being breached to see any further downside. If I go to my 4-hour chart, you'll notice that price, if I just squeeze it in, you can see that trend line is not too far away. And when we did get the breakup, we saw a lot of indecisive candles. So not really good. And in the breakup here, we saw the MACD was above, and that confirming that price wasn't really moving with true sentiment to the downside, because the MACD was above the zero line and RMA was still below. So as it stands over now, you can see that price is wanting to trade higher or test a monthly fib, and is doing so. But you can see very consolidated on the 4-hour. If this is to be true buying sentiment here, we do need to see this 23.6 being breached as soon as possible. So we want to see price getting above this 15,2900, but ideally above the institution. So anything above 15,300 would be far better, because the institution is still above this major resistance. So there's a lot of work that sterling needs to do in order to look positive long term. Okay, we do need to get above this monthly fib, but also this institution as well, to see further true sentiment kicking to the upside. Swing lows dictates downside movement. Swing lows, swing low, swing low, swing low, break. But this break has come and we've broken into a major support and resistance level. So it's imperative to get above this in order for this to be a null and void trend to the downside, and now we're looking for an intermediate trend back to the upside. So here, be patient, wait for confirmation break of 23.6 and then head higher. If not, because it's a major monthly fib retracement, expect maybe a bearish engulfing candle of some sort, because we're trading below it, and then continue to the downside. US dollar Swiss franc. Here, US dollar has seen a lot of movement to the upside. We had a really interesting scenario the past couple of days. We saw a bullish engulfing candle break higher, and then what we wanted to see price actually consolidating yesterday, in particular above the 50%, in order to give us a genuine indication that price was happy above this area, the pullback, and then we could look to target the 61.8. That failed to materialize. As you can quite clearly see, we saw bearish engulfing candle close lower again, and now you can see on the Asian session price is reattempting the 50% line. So we have almost a tweezer top formation here at this 50% fib on daily retracement. Okay, you can see I've taken my higher in May just recently to the current low we saw in June. The 23.6, the 38, and now the 50 is now in play. The indicator box looking more positive than negative. However, the only thing in the way at the moment now is this 50% on the pullback. So if we go to our 4-hour time frame, there we go. You can see the institution, which acted as a real pain in the backside for a while. We had these shooting stars, exhaustion candles. However, the sentiment was still wanting to go higher, because after getting these shooting stars, we didn't get any confirmation bearish engulfing candles moving lower. We actually got further indecisive candles, and eventually price reattempted and broke that higher. On the pullback, however, failing to actually find support, and subsequently now falling back below. So another fake out here, and as long as the 50% line remains above price, then we should be looking for negativity. It's still above the institution though, so as it stands at the moment now, there's more sentiment to the upside. However, price needs to get above 50, and we need to see a nice bullish engulfing candle close above this area. You can see over here, not very bullish indeed on these 4-hour candles, very indecisive once it got above it, so no true sentiment leading into that. So very important, hence the reason why I like looking for 4-hour bullish engulfing, bearish engulfing candles, because that concurs with it if we're getting true sentiment or not behind any price action. So good things are 20 institution in particular and the 50 or below price, and that's the most important part. Also trading above a weekly major fib here in the shape of the 23.6, and as long as we're above that one, then we're ultimately going to be heading up towards that all important monthly 23.6 fib above us, which is not too far off from price is right now. So in total, roughly about 230 odd pips to that level. However, we are still having to deal with the shorter term fibs, or the shorter term resistance levels here in the shape of the 50% retracement at 94.80. So imperative to see a bullish engulfing candle close above, ideally on the 4-hour, and then look to see if we can enter and then target those upsides for the foreseeable future. US dollar Japanese yen, here again, similar to the US dollar Swiss franc, we had upside recently on the US dollar, prices bouncing off the monthly fib here in the shape of the 38.2 after breaking through the 50% fib recently, which also happens to be the 61.8 on our daily. Okay, so you can see my blue is my monthly, the red is my weekly, and these little yellow dotted ones are my daily. So our daily high all the way up here in May to my daily low currently here in June. You can see the 23.6, the 38, the 50, now the 61.8 has come into play, which is also my monthly 50% retracement. So very strong resistance area here, very strong consolidative range. You can quite clearly see through April a very much a sticking point for this particular pair. So bullish engulfing to the upside, the pullback, which was bound to happen, but the pullback not actually finding support on the pullback. Okay, so very, very important. And if I go to my 4-hour, you can see that breakout pullback. Now we wanted the 4-hour candles to actually consolidate here, hammer, bullish engulfing candle of some sort to push on, or morning star. That failed to materialize. And as I mentioned, swing highs dictates upside, swing high, swing high, swing high, swing high. And what we wanted to see here was that confirmation breakout, but what we got was indecision candles, and now the decisiveness looks like it's fallen to the downside. However, this 4-hour candle has not closed yet. We've still got another hour, just above an hour to go on this particular one. Look at the intraday sentiment is very much negative, very topsy-turvy on this particular pair. The sentiment long-term still looks positive. However, intraday one of negativity, and you can see that consolidation. So still above the institution, however, but in order for this to be genuine, we need to maintain above the monthly fib here in the shape of the 50% and also the daily. The longer she spends below this 50%, the more likely price is going to revert to the downside and reattempt back towards institution or back to our daily 50% retracement level, which is a comfortable 80 odd pips away. Okay, and then if that fails too, then we're going to be targeting back towards our weekly fib retracement down here at 22.6, which is a consolidation low. Okay, so that's it, short and sweet. As I mentioned in the start of the video, if you are trading over today and tomorrow, please do so with very, very, very good money management rules. There's a lot of speculation out there over these next 2 days, and the last thing you want to do is be caught into it and to be spat out each time with a loss. So it's far better in my eyes to rather stand aside. If you're not in any trades, to rather stand aside, wait and see what the outcome is over these next 2 days, because then it allows you to trade a lot of clearer picture going into the new week next week. Okay, so long weekend for most, in particular my wife and I, Nikki, and we don't trade on non-farm payroll, and today in particular, because this afternoon, 4th of July, there's not going to be much volatility out there because the US market is closed. So one to watch today will be interest rates, euro and sterling. Other than that, it's going to be quite consolidative, I presume. Other than that, have a fantastic trading day, and I will catch you first thing tomorrow morning. Until then, you guys trade Serene.